committee decided to lower the target range for the federal funds rate by a half percentage point to 4.75% to 5%.
As you saw, the Fed Reserve cut rates by 50 basis points overnight. But as the dollar index dropped right down, we saw it recover twice as quickly. In this video, I'll break down about what happened during the FOMC news release and what to look out for moving forward. This was one of the least predictable Fed meeting in years, as markets were undecided on what the Fed Reserve could do next. While a rate cut was much anticipated, markets were torn between either a 25 basis point rate cut or a 50 basis point rate cut, and these were the percentages right before the news. The Fed Reserve has been hiking rates since March 2022 as it was combating against the sky-high, record-high inflation levels due to the overstimulus that they had to introduce to combat the slowdown during COVID. In fact, it was more than 4 years ago, back in March 2020, when the Fed Reserve introduced their most recent rate cut. Another reason why the markets were so concerned over a rate cut decision and the scale and magnitude of the rate cut to come from the Fed Reserve was because of the recessionary fear. The data from previous years and decades showed that every time the Fed cut rates, a recession followed. So now let's look at the key points from the economic projections that was released and some major takeaways from the press conference. Well, the first thing we look at is the dot plot. The dot plot is an assessment from all the members of the FOMC with their views of where they think that interest rates could be or should be at different intervals into the future. What we see here is that the dot plot for the end of 2024 is expected to be between or around that 4.5% level. Remember, now they have just cut rates down to 5%. With 2 more interest rate decisions until the end of the year, it is expected or we're likely to see another 2 more rate cuts, maybe 2 rate cuts of 25 basis points to take it down to a 4.5%, as what most members are expecting right now. So the main reason why the members of the FOMC are expecting rates or are plotting for rates to get down to that 4.5% level is because of what we see here on the table. Right? You can see right above me where unemployment rate is looking to stay at 4.4%, but they're expecting or projecting that core CPI or core PCE price index is expected to slow down further together with the PCE inflation level. So on the release of the interest rate decision from the Fed, we saw the dollar index spike right down. However, this changed very quickly when the press conference started with what Jerome Powell said.
Again, the labor market is actually in solid condition, and our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. Labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. But they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that.
So over those few short clips and looking at how price bounced right back up, we saw that Chair Powell, during the press conference, very differently came about saying many times over and over that the labor market was solid, the US economy was in a good shape, it was growing at a solid pace, the labor market was close to maximum employment, they were close to mandate, the economy was growing at a solid pace again, and there was growth in economic activity. So although they had cut rates by 50 basis points, it felt like Chair Powell, in his press conference, was actively trying to prop it up, not sound too dovish, but to give the good news to kind of balance it off, to push it back up, which worked perfectly. We saw the dollar index climb right back up beyond where it started from. Now that we know what has happened, let's look into what could happen moving forward and the trade ideas and opportunities that you could jump into. So, as we looked into what happened with the FOMC rates decision and anticipating that there might be two more rate cuts to come until the end of the year, another 50 basis points likely to be cut from the current rates, we look at the dollar index and we should be anticipating further downside. However, the dollar index is also approaching that strong support level, which coincides with the 61.8 Fibonacci retracement level from the longer term. So, downside expected on the dollar index, but watch out for that 98.00 support area, which is going to be quite crucial. Zooming into the dollar index and looking at exactly how it could get to that 98 round number support level, I'm anticipating further volatility as it approaches that support area. And we're looking at dollar bouncing back down. It's in that downward channel, so it might bounce back down, test the bottom of the channel, retrace slightly before coming back down again. Remember again, the next FOMC meeting is on the 7th of November. So there is still a couple more data points that needs to be considered before we head into before we consider and think about the possibility of a rate cut to come again on the 7th of November. Although the FOMC had cut rates for the dollar, and we're expecting further downside on the dollar, this could push the euro dollar up, and it's approaching its strong resistance level at 1.13. But like I said, although they have cut rates, anticipating further upside on the euro dollar, there is also the question about how the ECB could react to this news. The ECB also on their path on cutting rates could bring the euro dollar down if they start to adopt a more aggressive rate cut policy. So upside on the euro dollar, if it gets beyond 1.13, could get up to 1.16, but I think that there could be that limit to the upside before it comes back down again to test that trend line. The monetary policy for the BOJ and the FOMC had been diverging for the longest time. That led to the US yen climbing strongly to the upside to reach that 162 historic high level. But now, given that the US FOMC is on a rate cut decision or path, and the BOJ is on a rate hike path, the divergence of monetary policy is actually getting closer. It's actually heading towards a convergence. And because of that, we're looking at the US yen likely to push to the downside. What it needs to do is break the current support level at about 140 or 141 and could head down to that 127 or 128 round number support level. Of course, as it heads to the downside, a lot more decision points to come, a lot more volatility and choppy price action to look out for. In terms of looking at gold, I'm expecting gold to form more all-time highs. It's currently approaching that 2600 level. We're going to see it push higher. We're going to see choppy price action as it tests that round number resistance level and tries to break higher. Any deep retracement could be a good place to buy into value, and I'm expecting gold to trade up to 2760 as a big resistance level. However, it is going to get very choppy. It is going to take, or it could take a while. This is a position that you want to manage closely. Bitcoin reacted very well after the FOMC rate cut decision. In fact, it has been trading up and is currently at 63.75.1. Further upside could be anticipated but it is trading within that channel which started since March this year. This means that if Bitcoin fails to break above that 68,000 level, we could see it retrace back down, staying within the channel. So some upside towards 68,000. If it fails to break that resistance level at the top of that channel, it could come back down to test the support at about 52,000 again, and then possibly bounce back up. So a lot of opportunities here on Bitcoin to look out for. So that's what happened with the FOMC rates decision and also what you could look out for moving forward. If you found this useful and informative, please remember to click the like and subscribe, and also check out all the other videos within the channel.